Well, hello everybody, welcome to the Forex market analysis session. My name is Alexander Nikitin. I'm a professional trader and a developer of MPS software. And if you guys are new, what I do in these videos, I showing you the trading opportunities that may happen next week, as well as I explain you some aspects of technical analysis, psychology of trading, and money management. In today's video I want to show you the high probability setup that is called a Gartley setup. Actually its name depends on the approach that you follow. If you are a harmonic trader, if you follow the harmonic trading approach, it is called a Gartley pattern. If you are an advanced pattern trader, then it is called a Gartley advanced formation. If you're neither of them, you may call it whatever you wish. You can call it simply Gartley. The way I trade them is called a unified Gartley. So it will be explained today. The first stuff that you need to do, you need to draw the swings on your charts. You need to draw those waves. You need to draw those movements from relative high to relative lows. Okay, and simply look at the lowest low on your chart, then draw it to the relative high, then draw it to the relative low, something like this, and then draw it to the relative high again. I'm using the so-called eye identification. I'm simply marking the swings. I'm simply marking the movements that are sticking out, that are most prominent. I'm not applying any kind of algorithms, although nowadays it is very popular to use algorithms rather than manual identification. Okay, obviously that no doubt that we have some impulsive movement here. What is an impulsive movement? It is a movement that violates previous highs in case it is a upside movement. It is the movement that violates the previous highs. So criteria 1 is met. We have an impulse movement. After we have an impulse movement, what we do, we stretch our fibs. First of all, we should mark that as X to A movement. And let me type it X. And then let me copy this, place it here, something like this. Go to text properties and type it A. Perfect, so we have X to A movement. After we have that movement, we need to stretch our fibs from X to A, starting from X and into A. And we'll look at this first retracement. The first retracement is called A to B movement. That's why I need to place another letter here, and I go to properties, and I go here, change its name. It is a B point. So the A to B movement should be precise 6-1A according to harmonic trading approach. What is actually precise? Well, right now it is in the middle, yes, but if you will measure, if it is closer to 6-1A, something like this, 56.5 pips, or it is closer to 786, it is 89.3. Obviously it is closer to 6-1A, that's why it is called precise 6-1A. The same stuff happens when it doesn't touch 6-1A. Maybe it is terminated some way. Here you simply measure where it is, if it is closer to 50 or it is closer to 6-1A. If this criteria is met and you have the movement that is precise 6-1A, you delete this fib and you stretch another fib from A to B. And the retracement of this, the retracement of AB movement is called B to C leg. That's why I need to move and place another letter here. Go to properties and name it C. So this movement is called B to C leg. Okay, you stretch the fibs from A to B, the B to C leg. And the B to C requirement should be this. It should be minimum 382. It means it should touch or it should exceed at least 1 pip or equals to 382. And it should not touch 886. If it is 1 pip less, then it is valid. Obviously, this doesn't touch the 886. Depending on your approach, right now we are talking about the harmonic trading approach, and that's why I am explaining you the rules of harmonic trading. If you are an advanced pattern trading, the C-point requirement may vary. In advanced pattern trading approach, if you are looking for an advanced formation, the minimum C-point requirement should be 61A, and maximal C-point requirement can go further than 886, but it should not exceed the A point. So it is an advanced formation approach. Right now, both approaches coincide. The harmonic trading approach and advanced formation approach coincide. That's why this setup becomes even more powerful. Not only harmonic pattern traders look at this setup, but also advanced formation traders look at this setup. Okay, once this criteria is met and you have this B to C movement, what you do next, you then simply calculate your potential termination of this pattern. And the potential termination of this pattern is calculated this way. First of all, you need to draw the ABCD pattern. Take this channel tool, it is pretty convenient to draw ABCD pattern. So simply stretch this to the C, something like this. So the AB leg equals to CD leg. We don't have the CD leg completed yet. We have a potential CD leg. And if we have this CD leg, and if price goes here at this point, right now it is marking the 24.05, 24 even, we will most likely have a reaction, the bounce to the upside. I will later tell you what is the most typical reaction to the upside, what is the most probable place for hitting targets. But for now, you should keep in mind that the termination of the pattern is this A to AB equals CD pattern, AB, CD pattern. If you are a harmonic pattern trader, yes, then this ABCD pattern should also be complemented with other Fibonacci ratios. The first Fibonacci ratio that we need to have is the inversion of Fibonacci, the B to C inversion. So we stretch the fibs and we'll move it inverted. If you noticed why it is called an inversion, in majority of cases we move it from left to right. So we'll move it from here to here, then we'll move it from here to here. But here, when we talk about inversions, we'll move it from right to left. That's why it is inversion. Okay, we will need extensions. So we take an extension tool, click it here. Oh, come on. Then we stretch this. Okay, we stretch this to B point. Yes, and we need this to be at C point, and this one should be at C point as well. So this one is an extension, inversion extension of C to B leg. So what we need 127 extension, and you see this AB equal CD movement coincides with this 127. You see this? So I will place a left-right label here, so you will see it. 2400. It is also even number. It is also something that typically gives a reaction. And another level that should complement this D point is the X to A retracement. And this retracement should be 786. Let's go here. Let's go right label. It is 786. Something like this. Okay, done. 786. So once we have these numbers, we have this cluster here, we draw a potential reversal zone, the zone between these levels, and we'll look at this zone. When price hits this zone, we'll look at what is the reaction here. Okay, while price is moving here, it should be a straight movement. It is not correct if the movement looks this way, something like that. It will be not correct, or if it moves this way, and it invalidates pattern. So the pattern should look exactly this C to D lag should look something like this, similar to AB lag. That's why it is called an AB equals CD pattern. It should be similar or like this. So no more than this one, no more than this. Minor, very minor consolidations, minor retracements, but no bigger movements. So this is a mistake that many traders do. They trade it when the C to D lag is very, very choppy. Okay, after that, what you do, you draw your triangles and the pattern becomes familiar. Something like this. X to A to B, B to C. So in advanced, in harmonic pattern trading approach, yes, you look at powerful bearish candlestick formations within this zone. You first wait until all these numbers hit, and then you look for a stabilization when shadows become larger and bodies of the candles become smaller, and then you look at some candle that engulfs the previous candle, or some candle that cancels half of the previous candle movement, or something that is called a hammer reversal formation, or whatever. You are looking at some price section to enter at this pattern, to execute this. This is not an aggressive approach. If price will move it straight, yes, you simply don't enter, and you don't have any trade. Okay, but on the contrary, in advanced pattern trading approach, it is done a bit differently. It is a bit different. So the entry is not calculated as the confluence of three measurements. It is not AB equals CD pattern, it is not B to C inversion, it is not the XA retracement. In advanced pattern approach, the D point is only one level. It is A to B, A to B, extension. So in advanced pattern trading, the completion of the pattern will take place here at this 127 A to B extension, so slightly lower than the harmonic trading. You said this? Okay, hope you understood the difference. And of course, the advanced pattern traders, advanced formation traders, they will trade it aggressively. Okay, as after the trade is executed, harmonic traders do the management, and this is very aggressive management. So first of all, whatever trader you are, it doesn't matter, you stretch your fibs from your A point to where the price started the reversal. In case of advanced formations, price didn't start the reversal yet, so you stretch your fibs from to your completion. And then after that, if price goes deeper and then it starts the reversal, what you need to do, you need to place this point of your Fibonacci's here. This is called target adjustment. So initially your target was here, and if you stretch it lower, it goes slightly lower. This is the target management. You see, when I stretch it lower, 382 goes lower as well. It is called target adjustment for advanced formation trading. As for harmonic trading, you wait for a reversal to start first, yes, some bounce of the potential reversal zone. You place your fibs here, and after that, if price is going to the upside within 7 candles, within not more than 7 candles, it goes and starts the reversal to the upside. After that, you draw your trend line, somewhere 45-degree trend line. This movement should respect this 45-degree trend line. If it crosses that movement, then the reversal becomes suspicious and you exit with whatever small profits. Okay, basically you have it this way. In majority of cases you have it this way, and after that you accelerate to the upside. After you have the acceleration, you draw your accelerated trend line. So you take your target at 382 and you take your second target when the accelerated trend line is broken. It may be slightly above 50, it may be 618. So your second target is the break of that accelerated trend line. Sometimes the order is placed on 618 and you simply don't wait until it is broken, you simply exit at 618. This is the target management for harmonic patterns. So in majority of cases, when you are when you don't have a reversal within the 7 candles, or you first have the reversal and then it is broken to the downside without any respect to this primary trend line, the trade will move lower. This signals to you that you need to get out of this trade. Many traders are stubborn, they simply enter and they wait for the trade to hit targets no matter what. It is nonsense. Okay, as for stop placement, in case your trade does not work, stop should go below X. Price should respect this level. It may start the reversal, but it should never cross the X point. Give it some space to perform reversal first. Well, that's it about the trading management for harmonic approach and advanced pattern approach. Okay, I have my own approach. I call it the unified Gartley, as I mentioned in the beginning, and it is slightly different from them all. First of all, I don't identify my patterns using manual, using eye identification. I don't rely on eyes because it is very subjective and you can't perform any objective statistical expectancy if you only rely on eyes. Okay, in pattern identification you should use some algorithm, and to do that I have created a special software that is called an MPS software. Right now the manual mode is hit, and you can draw the pattern simply stretching the diagonal. No Gartley is enabled. Let's go to harmonic approach. Gartley is enabled. Let us stretch the diagonal, and you see this ABCD complemented with B2C inversion and plus 786 retracement. You see this? Let's delete this stuff. Let us switch to advanced pattern approach. Disable all this stuff and enable only Gartley and draw it to diagonal. So you see the completion goes slightly deeper. Okay, let's compare the two. Here it is. Next, As for my approach, I'm using the unified Gartley. That's why I switch this and I enable custom. If we draw it diagonally, the custom Gartley is drawn. My approach says this, that this is the wide reversal zone. It should reverse somewhere starting from here, ending to here. Okay. Another stuff that I wanted you to understand is that all the patterns of this type were first identified, were first discovered using kind of algorithms. For example, the so-called butterfly pattern was discovered by Bryce Gilmer using his software wave analyzer or something like this. The harmonic patterns of Bett pattern, Gartley pattern and other stuff was discovered by Scott Carney. He was also using the software algorithms to discover those patterns. And as for the software algorithms, it tells you when the movement is straight and when it is not straight. It is very important that the software tells you if you have one movement in front of your eyes or you have two movements, because there is small kind of retracement within this. For example, here, do we have one movement or we have it 1, 2, 3, 4, 5 movement? So it is a question, and it all depends on how you identify what algorithm you use. Okay, as for the algorithms, I explained you in the previous video that there are two main approaches in the algorithms, and you can use the price extremes algorithms like fractals or n number bars high, n number bars low, the extremes. Or you can use the overbought oversold condition oscillators to mark your turning point, pivot points on your chart. This is also very popular. The wave traders, the majority of wave traders use the oscillators to confirm the third leg, the fourth leg, the first wave in their wave counting. Mostly MACD is used, but other oscillators are also used. Harmonic traders vastly use the RSI indicator and HSI indicator. RSI is relative strength index, HSI is harmonic strength index. This second indicator was developed by Scott Carney also. Okay, and well, that's it. That's it about the algorithms. The software also can draw the algorithms. What you need to do, you need to switch for the algorithm you wish, and you need to switch this on to start drawing. Right now we have Sunday and no ticks coming into this MetaTrader. Yes, that's why the information is not updated. To update it manually, you need to refresh your rates, and you see it is drawn. I also enabled the zigzagging, so it tells me if I have one movement or I have two movements. It is very important in the C to D leg, CD leg movements. So if the algorithm will switch to the upside and then it switch to the downside, so I have it something like this, then it will be invalidated, the pattern will be invalidated. Okay, and of course I can switch to other patterns. If I enable this as a Gartley pattern, let's go to refresh rates. So the my pattern completes at 786 and the advanced formation Gartley completes at the 127 extension. So my price is 24.35 and the advanced formation price is 23.64. Okay, the stop loss for an advanced formation is 1 ATR below this X point. The invalidation level for my pattern, the unified Gartley, is 113.50. Fibonacci extension. So in this case they both almost coincide. Well, let us switch to stochastic indicator, and that let us redraw the patterns, refresh them, and what you see the same patterns on your chart. Let's go manual first. Let's disable them all. Let's delete them all. Let's go to stochastic. Let's enable it on, and let's refresh. You see the same patterns. So let's go to RSI. Let's refresh. So the same patterns stay. So it means that not only my algorithm is looking at this zone, but also harmonic traders, also advanced pattern traders, also the guys that choose price extreme algorithms, also the guys that choose stochastic algorithms, RSI algorithms, commodity channel index algorithms, or Williams percentage range algorithms. So all these guys are looking at the same conditions. They are looking at this same zone to enter higher. Okay, if you guys are new to this pattern trading, you are welcome to visit my website www.ps-software.net. Click this Learn the Patterns tab. Yes, and you will have this diagram. Whatever pattern you are interested in, simply click on the diagram and you will have the absolutely free tutorial on how to identify this trading setup, identification rules, criteria 1, criteria 2, criteria 3. So you should keep them in mind, you should remember them. Okay, then it will give you trade execution rules, what you need to do to execute the trade, and it will give you the trade management rules. So you first learn the rules to identify this pattern before you test it, before you try to exploit this trading opportunity. Okay, and as for the software that I have created, you are welcome to visit the home page of this website, the same website, and watch the video of introductory. Basically it explains the importance of using algorithms. It explains the difference between the two approaches of harmonic trading and advanced trading, and it also gives a quick overview of the software that is already available in the market. Okay, and watch this demonstration video. It demonstrates the all power of the software that I am exploiting in my trading. So if you wish to have the same setups, not only on daily time frames, but on 1 hour, 2 hour, 5 minutes, whatever you trade, and you want to have high probability trading opportunities, you are welcome to watch it, and you are welcome to test it. You are very welcome. Okay, you will find the link in description. That's it for today. The trading opportunity somewhere completing at 24 even number. Very good reaction is most likely will happen. That's it. Hope you find this video useful. If so, give me your thumbs up, share this video on social media. Until then, good luck and good trading. Hope to see you soon.